let's take a closer look at some of the themes that are resonating, particularly in the materials space. Shawn Hickman joining us from Market Matters. Shawn, good to catch up with you again. Of course, we didn't have any direction from the States overnight because they were closed for the Labor Day holiday, but quite a bit of action in Europe, particularly as far as the energy space is concerned, where those gas prices are going. Overall, how are you looking at the commodities at the moment?
I think with the energy complex, just stay long. Don't fight it. It's going higher. We can see another 10% from the likes of Chevron, another 10% from the likes of Mobil across in the US, and I think Woodside will go along for the ride. So just stay long, don't fight it, they're going higher.
All right. Now, when we take a look at commodity prices, they have come off. We were just talking about that since the highs of March there. Also, we need to factor in what's going on with China and likely demand out of there as that the economy continues to weaken, particularly as they persist with its zero COVID policy. But moreover, I guess the global economy. Weakness in the face of rising inflation and the response from central banks at the moment. So what are you liking in the commodities complex other than energy, which you've spoken on?
Patience.
Right, okay.
I think patience is the key here. We've got a few things that go. Obviously, Jerome Powell spoke a few days ago now, over a week ago. He's basically said they're not going to start cutting rates until 2024 probably now. They're not going to cut rates next year. So they might keep hiking, or they will keep hiking, maybe not as fast as everyone first thought. The market's backed off a bit locally. They're thinking we're going to go 0.5 today, which we agree with. Mm-hmm. But they were looking above 4% locally next year. I don't think that's going to happen. I think it would be near 3%. But the point is we've got interest rates are going up. We've got central banks now saying they're not going to cut next year, so take a deep breath on that front. And we've got the wild card of China, as you say. China, to me, it's a guess. What are they going to do? We've got 60 million people plus in lockdown at the moment, but in the third quarter, they're going to try and stimulate an economy that's in lockdown, which is kind of a bit of a contradiction. The reason I'm saying patience is we think there's a very strong possibility that the likes of copper prices go lower. They've been falling all year. If they go lower, if we see a washout panic, it's a great buying opportunity because the Bank of America positioning report, which came out a few weeks ago or a week ago, told us that the commodity space is very long. The market's long. Fund managers are long commodities, so we can get a washout there.
Well, I mean, we know what's going on, particularly with copper, given the thematic of the decarbonisation and electrification of the planet. Specifically, you're going to have to look at what's going on in the EV sector at the moment. So, you wouldn't be buying copper at this point, but you're perhaps looking for it to go lower. Are you talking about buying the copper producers, explorers? Where are you looking?
I'd be in the producer side of things. In the past, we've always played with Oz Minerals. And I could have to clarify that. We could start accumulating now, but we've got an Oz Minerals position, which obviously is under takeover from BHP. So I think you can take that out of the equation. So we're now actually casting our eyes somewhere we haven't done in the last few years. We're looking at Sandfire Resources. It follows the copper price extremely closely. And if we're right, if we can see a washout in copper, the risk reward into Sandfire below 350 would look fantastic.
We might just bring up that chart if we can on Sandfire. So sorry, at what point would you be buying in, did you say?
Well, fresh lows, fresh 2022 lows. I think that's under 350. Any sort of pullback towards those levels, that would take copper back to about 300. Then we'd be looking at it very closely.
Yep. All right, so that's Sandfire. Any other copper producers you're looking at the moment? I mean, you mentioned Oz Minerals.
Well, that's off the table as an under takeover, one would assume.
Yep.
Not really. I mean, I think the other way to play it is obviously through ETFs. You can look at the COPX ETF. But no, we're being quite specific at the moment locally. We're looking at Sandfire.
Yep.
If you say to me, would you start buying here, which you kind of alluded to before, yeah, I think if you start buying here today, you'll probably be making money in a year's time.
All right.
But I'd certainly leave some ammunition to average into weakness.
All right, but it's a long game then.
Yes.
All right. Another stock you're looking at is Newcrest. Now, the gold miner. We know how much pressure gold has been under recently, and the gold stocks have suffered as a result. It's been confounding, hasn't it?
Looks horrible. It looks so horrible, I thought I'd bring it up because you asked me about it last week.
Right.
I think so far this year we've seen the likes of Northern Stars down over 20%. Newcrest is down 30%. They're very meaningful losses.
Yep.
They're big paper losses. But we're seeing some divergence now in the gold price. The US dollar seems like it's blowing off. And I think there might be a possibility for them to bounce strongly over the next 6 to 12 months. We're seeing, I say, some contradiction. We're seeing the ETFs are still not saying buy the gold stocks yet, but the Sprouts gold physical holdings are. They're saying that we're getting near contrarian levels where people are so negative towards gold and gold stocks, you can start accumulating them. We're not going to add to our positions yet, but I thought I'd throw that in there because you asked me about it last week. I think they're close.
What's the catalyst then for you? I mean, it clearly then dependent on where that gold price is going, what you feel as though it could go lower yet from here?
Well, gold's been under pressure from obviously rising bond yields and a rise in greenback. Those aren't going away in a hurry. So maybe a blow off in the US dollar, panic buying in the US dollar that might see gold go lower. But I think again, like with copper, if you start accumulating here slowly, and I stress that word slowly, you've been making money in 6 or 12 months time, but leave some ammunition, they're probably going to go lower.
Yeah, it's been something of a trap for gold bucks, hasn't it? Because you'd think in the face of, as an inflation hedge, but also with geopolitical risk, that gold is the place to be, but that hasn't transpired. Beyond Newcrest, any other miners you're looking at?
We own Newcrest, by the way, and it's been our worst holding, so that kind of says it all.
Right.
Or one of our worst holdings. I think Northern Star is a great play. Probably Northern Star.
Yeah.
Obviously WAF as well. Western Africa's, that's gone quite strongly as well. I think any of these stocks in that space, keep with the quality, keep it simple, stupid. Somewhere like Northern Star, somewhere like Newcrest. On weekdays, if you start tickling a few on, you'll probably be making money. But keep some money in ammunition.
Yeah.
Don't throw the kitchen sink at it because the trend is down. It's a contrarian play, but I thought I'd throw it in there. I think it's getting close.
Once again, you're sticking with the producers, not the explorers.
Yes.
Okay.
Keep it simple, stupid. Keep with the quality. The last 12 months has seen the cream where we know where the earnings are coming, we know where the money's come from. That's where we're getting the best returns.
I mean, clearly, if you're going for an explorer, it is speculative, but then the returns are obviously, the rewards are there, aren't there? But what you think is just too much of a risk?
I just think I'm getting old and I like to sleep. I like to sleep at night. So keep it simple. If you know someone's digging something out of the ground at a certain price and they're making so much money, then I like that. If you're exploring and they might not find anything, for example, it is more in the speculative basket. We've got plenty of speculative opportunities at the moment, and traps for that matter. So if I'm going to play gold, I'd keep it simple, stupid.